Hey Alpha fam, welcome back to another episode of Alpha Commission. And today on Trading Thursday, I'm just going to go over the setup which gave me confidence in taking the long trade on the chart, even though most of the market was pretty bearish. They thought that we were just going to collapse under the Fed decision. Everyone was so scared. All the influencers, all the gurus, all those guys were just saying, oh, we're going to drop down to hell most likely. And there's a reason why, on Trading Tuesday, I actually set us up for a long position, and I'll go over that in detail as well as my thoughts on the current chart because it was dead accurate, guys. It was dead accurate, and although I didn't expect it to be as bullish as it was, there are very legitimate reasons why we took that trade. Okay, and we can celebrate that it exceeded our expectations, but we should also understand why it was a good trade. If we do look at the charts, of course, the good old crypto bubbles are just green. Everyone's either taking profit or they're seeing nice pumps, and so this is really nice to just see. I mean, we have had a long period of just red all over the charts, and so to see some of these altcoins, especially, also getting some love, it's just nice. And we shouldn't be carelessly bullish, but we should be optimistic that there is the potential for a summer relief rally, which again, like I had been arguing with, I had been debating this with many people that just thought it was not possible. And while there still is a chance, and I highly agree with that, that we can get smacked down depending upon the earnings and whatnot. So far, we've been seeing pretty modest news, and so a lot of people are getting distracted by, are we in a recession? Are we not in a recession? Guys, who cares? Like the key point is inflation. It's not the recession. Like for quarter two, we're talking about like fighting inflation. Okay, like a quarter three, we can all debate to the ends of the world like just how much of a recession that we're in. But right now, we're just bringing down the like careless, reckless, almost criminal exuberance of 2020 and the $9 trillion that the Federal Reserve basically printed. And the Federal Reserves all across the world all did the same thing. These type of transnational globalist, corporatist elites, they just gave themselves infinite money supply, infinite money supply at basically 0% loans to each other. And that's different than money printing, guys. Okay? Money printing doesn't on its own cause inflation. If you balance money printing with taxes, then it's net zero for money supply. You paid for it. Okay? I mean, yeah, people don't like that necessarily, but it's still paid for. It doesn't necessarily contribute to high inflation. What does contribute to high inflation is if you're just spending like crazy on the military and then you're like cutting taxes. Then you're printing money to pay for that stuff. What happens is if you're just giving out stimulus checks like crazy, but you're not having any tax revenue in order to balance that out. What causes inflation is if you're giving 0% interest rates to corporations, which then extend loans and lines of credit to consumers and to housing loans and to car loans and to corporations to take billions and billions and trillions of dollars of loans, which it's basically free money because they're paying 0% interest, right? And so that increases the money supply. It makes money more liquid, more abundant. And so money becomes worth less because the more available something is, the less value it has. So money becomes worthless. And in order to fight that, you have to increase interest rates so that these crazy transnational globalists aren't just like giving themselves infinite loans to their billionaire buddies, right? We think that $1,000 stimmy check like really mattered. No, no, it's the hundreds of millions of dollars, the billions of dollars, the trillions of dollars of loans that central banks and corporations extended to each other, basically virtual money printing in the form of 0% interest loans, which has caused hyperinflation. Okay, so that's a private sector issue which the Federal Reserve, which is supposed to be independent from the government, needs to crack down on in order to kill hyperinflation. And that hyperinflation is what they were spending money on everything, everywhere, buying up everything, outbidding each other for everything, buying houses at the top of the market, buying just crazy prices for everything without a care in the world, and it just contributes to hyperinflation. Okay, and so, if we see the GDP contracting, in these, in this last half year or the last couple months, really we're just killing off that freaking ridiculous scandal of basically the transnational billionaires like extending infinite credit to themselves. So they don't care about inflation. You know why they don't care about inflation? They made so much profit that they don't care. They don't care if a food goes up, 20%, because they made millions and millions of dollars, right? They made billions of dollars. They don't care if the food prices go up a little bit. They don't care if their gas is $3 or $4. Okay? They don't care. It doesn't matter to them. And so that type of low interest rate is actually paid for by inflation on the middle class and the lower classes, right? That's why we can be so angry at Jerome Powell, both under the Trump administration and the Biden administration. Okay, he was too late, but at least they're fighting it now. Okay, and so all of this back and forth about is it a recession, is it not a recession? Politics, 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 wah wah wah, whine, whine, whine. It's just to distract you from the fact that we are now at levels which are great for potentially taking advantage of relief rallies, not necessarily the bottom of the market. We haven't confirmed that yet, but that they're trying to scare you, right? So that their billionaire buddies can, after having bought all their stocks in 2020, right, using that money which you paid for, you paid for them to be able to buy back their own stocks in 2020, and then they dumped it on your head in 2021. They just dumped all of their stocks right on you. You were their exit liquidity, right? So they got all of their money out of your 401k, basically, right? They got all of your money out of your crypto. They took it all out because they're all working with the Fed. They're all working with the Feds across the entire world, right? And now they're trying to scare you not to get back in. And so people were terrified. But look at the green on the charts. Why is it responding so positively to the Fed increasing rates? Because these are just like dog whistles, okay? They told us in advance they were going to increase it by 75 basis points. People who expected 100 basis points were way off base. People who were terrified the market was going to collapse were way off base. Okay, this was the moment for the relief rally. That's the debate that I've been having with a lot of people. And while, of course, I can present the bearish, worst case scenario, I've also presented, if you go back to the macro Monday prior to the last one, I presented the best case scenario, and then in the next one, I presented the worst case scenario. You can decide for yourselves. But I didn't tell you guys to start buying in until just recently. Okay, and so we are finally at levels that start to make sense to perhaps, you know, be considering long positions again. And while today might not be that moment, the other day was definitely one of those days, and we can go over the charts for that. Tomorrow we have a PCE data coming in. This is going to probably influence how the Fed thinks in September for how it increases rates, and so we can talk about this stuff tomorrow. Just to be aware, there could be some volatility in the market, and the market may want to contract depending on, you know, what the indications are for this kind of core inflation data. Okay, so just stay on your toes, Alpha Fam. Like don't give up. Like stay on your toes. And you didn't miss anything yet. I'm gonna show you this on the charts, okay? So of course we did get better earnings than expected for Apple, and that did allow us to have like a yet another day of pumping, which is great. Can this last forever? I don't know. You know, again, like we can debate endlessly about recession, but only idiots are doing that, okay? Like you're literally buying into the stupid media narrative. Is it a recession? Is it not a recession? Who cares? The whole point of the Fed increasing rates is to get rid of the bubble. The bubble is what was driving the GDP, right? And so of course GDP is going to come down. What did you think that they were doing? They're trying to fight inflation. The point is not the COVID money, GDP bubble. Nobody cares about that. I mean, obviously there can be a pinch. Like at some point we'll lose, jobs, but that's a quarter three issue. That's not the issue that we have right now today. Okay, like in 3 months from now, like we can really talk about that and get into the details about just how deep is a recession going to be. But for right now, enjoy the day, guys. Don't let all this freaking propaganda, just shake you out of the market. Okay, be aware of what's going on. Okay, and stop worrying about the label of something. Just understand what is happening. We are fighting inflation, and so of course the economy is contracting. That's the whole point, right? Who cares what they call it? It doesn't matter. The name doesn't change what's happening, which is that inflation is being fought, and so the next battle for Q3 is going to be how deep the recession is. But for right now, we are fighting inflation, and so far, the picture is starting to look good. It's starting to work. Okay, so that's why stocks are responding positively, and they also like that Jerome Powell increased to 75 basis points, not 100 basis points, giving them a chance to breathe, giving them approval to pump, and part of that approval. Um, Part of that, bullishness might be also that the Fed indicated that they're probably not going to raise it to any extreme levels in the future. That the next time they raise it, maybe it'll be 75 or 50 or something like that. And so, we're starting to get that period where increases may be um, lower than what even 75 basis points, and so markets really responded well to that. Okay, just wanted to share like what's going on. A lot of people are getting distracted by again, like these political parties, they get into your brain like little worms. They just rot your brain. Like get out of the political parties, get out of the media. Okay, like just think for yourself. Okay, like these elites on both sides of the parties, right, including Trump, including Biden, including Pelosi, including McConnell, right? And probably including a couple Supreme Court justices. And then the Federal Reserves in every country, in the world, from China to Russia to Europe, right? Like they're all pushing this on your back. And you have to be understanding what's going on. And the narrative is just so that they can have power over each other. It's not really helping you, okay? So we're just trading, guys. We're trading, and we don't want to fight against those guys in terms of the charts. We want to go along with how they think about the charts. And so, why did I get in? Guys, do you see this downtrend? We broke out of the downtrend. We found support on it, and this is where I said go in for a long. We could potentially get up to that 22,000 or perhaps even above if we can recover the bull flag. And what did we do, right? We broke, we broke out of this. We bull flagged. We started to break down. I got a little bit worried because we were starting to violate some of our EMAs. We were starting to test our support, but as soon as we broke up back above support, and as soon as we recaptured, this diagonal, I recommended, well, let's go long here. If we broke down under this level, then you go short. But we stayed above that level, and we put in this higher low, right? Guys, it's this simple. Don't overcomplicate it. Low, higher low, higher low, higher low again. High, higher high, higher high. And right now we kind of have a double top. So just to be careful right here, like we want to see a little bit higher, right? In order to continue this trend. And that's how simple it is, guys. Okay. And you want some extra confluence with that? Okay. We can go to our indicators, right? We can go to our indicators, and let's go to the weekly. Okay. So what do we see here? Let's just really spread this out just so that we can kind of see what's going on. what do we see here? Oh, hey, look, our stochastic, right? Our stochastic momentum over here turned up, basically right here, okay? I mean, I can't pinpoint, precision it because this is the weekly candles, but you can see, let's see if I can get it on a 5-day. Yeah, let's use the 5-day. Turned up right about there, right? So this was the first signal. Hey, this is looking pretty good. Our stochastic just crossed to the positive side. What's the stochastic? Look, it just shows like are we kind of overbought or oversold? Like just as we go up and down, like this, the stochastic also moves with us, right? We had a positive crossing on it that suggested, be open-minded to bullishness, right? We got a positive cross on the stochastic, right? On a high time frame, on the 5-day, okay, and on the weekly. So that suggested, that doesn't come around too often. We've been really negative for quite a while on the stochastic. Like, look at this. We've been negative for so long, ever since April. We've been so negative on the stochastic. We got a positive cross. Last time we got a positive cross, was in that kind of May area. And so we should just be open-minded to it. It's just kind of like an indicator. It could be a false positive. We could turn back down. But then what happened? Well, look at this. Then our RSI crossed up. And so now we have not only our stochastic, but also our RSI, right? In the bearish control zone, suggesting that if we like pop up, this could be potentially a good play, right? That buying in on the confirmation could be a good play. So here's our second line where we would just consider it strongly. And then what did we have corresponding with that? We had our MACD, our momentum turning up, crossing up bullishly at the same point. And so one, two, you don't need a million indicators. These three are more than enough. You could just use MACD and RSI and price action, right? And so look, I had three confluences of bullishness. Let's go back to the daily. I had three confluences of bullishness represented in these vertical lines, two of them on this one and one of them on this one. And I also had a downtrend, which then turned into an uptrend and had a breakout of the downtrend, which then retested. And so, do you want to buy on a high, or do you want to buy on the retest and on a higher low, right? Of course, you want to buy in on the higher low, this confirmation of bullishness, right? You don't want to buy up here, you want to buy in here. So even though we got two signals down here, right, we didn't buy because we were on a high. We wanted to wait for a pullback, and then that's the chance to buy in. And we also didn't buy just on the signal of the stochastic, even though it was at a really good spot. I mean, actually, I did buy in there, but um, you didn't have to, right? Because we were still under this downtrend, right? It's a little bit more risky of a play, but if you manage your risk, that's fine. But we did have this kind of almost a double bottom here. You see, like this level and this level are almost exactly the same. So it was basically a double bottom, which gives you a little extra confirmation that this could be quite bouncy. And so, of course, we can consider this trade. But if you just want to be extra conservative, 1, 2, 3, 4, and then also the uptrend. So 5, right? 5 confluences along with this higher low showing support. And so we had 5 or 6 confluences that you should buy here. Okay, and then if you also understood that the Fed was signaling that they were only going to raise 75 basis points, but the market was pricing in 100 basis points in part, then you knew that there was room for the market to pump. That's why everything's screaming on the charts. That's why we're having, right? That's why we're having green days. because the market thought we were going to have maybe 100 basis points increase, and they were getting super bearish, but we actually only had a 75 basis points increase. And so we pumped. And as soon as you heard 75 basis points from the Fed, that was just the cue. That was like the last cue that you needed to get in. And that's when all of this stuff just started going crazy, right? That's when we just started seeing these God candles right here, right? And so that's how I knew, guys, right? Like this was actually our buy-in. And what did we do? Like we suggested to take our first profit here at 21,900-ish. That's what I suggested that we could get through. And then we just pumped through that. We pumped through it like crazy, right? We just pumped through it. So that was my recommendation, to buy right here and to start taking profit here. I didn't know we were gonna like just go crazy like that. But the bull flag got completed again, and then we just went for it. Okay, and then where would resistance naturally be? Like at our previous resistance, right? So of course we're checking back here. Of course we checked back right here, like where this was resistance. And I suggested, oh, originally I was thinking to go short if we got rejected in this area, but I told you guys, right? I recorded it and I put it online. I told you guys I'm canceling any shorts because this is so bullish. Why would I short here? And sure enough, we like pumped like crazy again. Okay. So this isn't BS, guys. Like I'm not trying to like pull anything over on you guys, just in case you're wondering. Just want to show you my thought process. Even though sometimes I go over some type of stranger ideas, like just if you stick to pretty basic stuff, like you can be highly successful in this type of a trade. And so on Bitcoin, that alone was a 15% gain. On some of these altcoins, it was like 50%, even like 150%. Like some coins just went crazy. And so I don't know, like for those guys who were just too bearish or too scared here, again, like we're entering a period where you have to understand fundamental market analysis. You have to understand macro. You can't just use straight TA and just because you're gonna get shell shocked, right? Like you're gonna think like this situation is happening or this situation is happening. But you have to combine these things now, right? Like you can't just like throw money at stuff and apply TA and just think that it's going to work out. You have to understand what the Fed is thinking. You have to understand the global macroeconomy, and then you can get setups like this. And so let's just take a look at some of these other calls that I've made just over the last couple years, just to kind of give some context, right, to who you're listening to right here. Because I've made mistakes. I've made mistakes, guys. But this is basically my track record. Okay. So I really, really started to pay attention to crypto around this era, and I was just extremely confused by it. Just extremely confused by it. I loved crypto. I loved the concept. I'll get into that some other story. Let's not waste time. Okay. The key point is I learned about Bitcoin and Bitcoin only. I was advising some people on it, was suggesting them, that they were lucky that they didn't buy in at a blow off top, and that, that we were starting to approach levels where they might want to consider, if they believed in this asset. I personally believed in it and I didn't get in the market. Okay, so this was like a muddy mixed results, but I was advising people that this was going to potentially be a good opportunity if they could get a lower price than here. Okay, and then after COVID, I watched, right? I watched as these low prices were hit and ran up multiple times. And I just realized, man, I'm really missing out on this. And so I started studying here. But I had a nice job, so I didn't need the money from crypto or anything like that, but I was watching and I just thought, wow, like I really need to study this stuff more. It's so complicated. And so I studied it and studied it. I watched it go up. And then, like is a typical story as old as time in crypto. Like I stepped into the waters up here. Of course, I have been in global and international trade for over 10 years, right? That's as a professional. But in terms of trading like cryptos, just a whole different world, right? Like I can understand foreign exchange and different currencies and things like that, but crypto was just a totally different game. And I could just lose a lot of money just in the weird, just like crazy chaos of this market. And I also didn't recognize that while the stock market was going straight up, right, and we didn't have this same type of pause, the crypto market was about to like fall off of a cliff. It's just a very weird divergence with the regular professional markets, the stock markets. This didn't happen in the stock market. This was just a smooth line in the stock market like that. Okay, like yeah, there was ups and downs, but it wasn't like this. Okay, and so a lot of us in crypto, a lot of us, just from different spaces other than crypto, right? Even if we were familiar with trading, like we just got kind of bamboozled by this fake blow off top, right? And then we came down here. I learned how to swing trade, crypto, and I really started to apply EMAs and EMA theory quite strongly. And I had some muddy results still because got really nervous about this asset when it fell, but stocks weren't falling like that. Crypto fell, but stocks were not falling like this. Stocks didn't fall until up here. And so it made me really nervous. And sometimes I screwed up. I screwed up. These yellow ones are kind of like muddy results, kind of bad results. And then the green and the red is calls that I made. I was buying these lows and selling these highs. That's it. I think I had like 3 or 4 major trades during the summer of 2021, and they were just glorious trades. And then I bought here and I screwed up. I got nervous when we like got rejected at the mid channel, right? I got nervous, and I just screwed up a couple times in this area, like pretty badly actually. And then I also sold like basically break even or even for a loss right before we bottomed out. And then I realized, you know what? I have to apply a different type of macro to, crypto. And so I started doing on-chain analysis. I met my friend Crypto Reda during this time, and Crypto Athena, right? Some people who are hanging out at the AR Collective, a great educational group for crypto. Shout out to AR, right? But at that time, it was back in a group that was pretty it's pretty gross, man. Like the reason why, Crypto Reda and Crypto Athena went on to make AR Collective, and the reason I made Alpha Commission is to get away from the one that we were in, right? We wanted to make something better, like a better place. And Crypto Reda had been in the industry for much longer than I have, so he professionalized his and made it for pay. And mine's just like a free service. And I'll tell you why, I ended up just kind of like diminishing the Alpha Commission temporarily. It has to do with this era over here. But the key point was that we were just using this kind of like bearish downturn for education, right? And to really try to shore up like our knowledge of crypto and trading strategies that work for crypto. And so I nailed this entry, I nailed this entry, I called this top right here, saved a couple people's butts right here, but I didn't take my own advice, right? Trading is not the same thing as TA. And you'll hear a million people say that, right? A million traders say trading is not the same as TA. And so I called this top right here and I mentioned, guys, like you should get out of this market. Like this is probably going to be a heavy rejection zone up here. But I kept my assets in the market, and then this candle like wiped me out. It brought me all the way back to this level. Just wiped out all of the majority of my gains. And I was in kind of small caps down here, and they didn't run until this area. The high caps ran, not the small cap coins, not the micro caps, right? And so I didn't really get a lot of benefit here. I got a lot of benefit on this one, and then I just lost it all. That's the hardship of this market. It's crazy. It's just crazy. It's not like other markets. There's a craziness to it. And so I was really nervous to get back in, right? Really nervous to get back in. Even though I did the analysis and I suggested this was probably the low. We likely weren't going to violate here. I didn't make a call. I can't claim that. I was very nervous, right? But I did get in and make a call on this higher low confirmation, which was a great place. This was a huge amount of money to make, right? It paid for all the time that I had been in the market. the strategies that we were developing had finally worked out, right? AR Collective started to get formed, Alpha Commission started to kick up, and then the market turned around. And here, my friend Crypto Reda mentioned, like, he was considering to get out of the market around 62,000. We were studying macro together. We were studying all of these things, and then I decided, yeah, you know what? 59,000 is the bottom line for me. If we break 59,000, I'm out until we reach a hard bottom. And so during this whole purple period right here, I just basically shut down Alpha Commission. I got angry at people who were pushing coins, who were pushing, coins to buy in, basically falling knife coins, coins that we knew could go down as much as like 95%, right? If you know anything about crypto, you know that these things can go down like 85%, 95%. They can go down 99% and lose their value. So why would anyone push anyone to buy anything during this first wave correction? It was insanity, and I got really, really angry at people. I started to not trust people in this industry, and I think I overreacted to a couple people close to me who I should probably apologize for. But you know what? This is crypto, right? There are a lot of weird people in this industry. There are a lot of scammers. There are a lot of people with hidden agendas. There are a lot of people who would like to steal from you. There are a lot of people who are just not very trustworthy. And so if you lean towards the side of skepticism, if you lean towards the side of not trusting people like who are too close to you, right? And who may be influencing decisions about money or advising people on things to buy and where to sell. And if they're acting bullish during a downtrend, if they're advising people to hodl stuff and to buy stuff for a long-term hold because it's a quote unquote relatively good value, it's all right to get mad at them and to just get your distance, but try not to hurt people. But when people around you, when you see like actually just innocent new people like get hurt, like they bought a whole bunch of something and then they basically lost their life savings. Yes, that's their fault. It's not the person who gave them advice's fault, but they trusted that person and then they lost everything. And because I was running groups, right, and people around me were giving each other advice and stuff, I kept hearing stories like this. Like people would be in my inboxes saying like, "Oh, I wish I didn't do that." And I told them like, "Guys, I told you I'm not going to advise anyone to buy anything until we reach a hard bottom, and this is just the first wave down. Why would anyone be buying anything in this area?" Right? Like, so don't blame me. Like, I didn't tell you guys to buy anything in this area. I said get the F out, and that I was not going to advise anyone to buy anything until we had a hard floor. And so, yeah, I burnt a couple bridges in this area, right? But I'm okay with that. I'm okay with that. That was just, that's just how it is in crypto, okay? Like you have to find your people that you click with and that you share information with in a healthy way. And there's a lot of toxicity that gets built up in a bull market and in a bear market. Like you start to find out like who's reliable for you. It doesn't mean they're bad people or anything like that. Like they're great people, just different people, right? Different kinds of people. And so, you know, basically I shut down the Alpha Commission for a little while, and I was proud to do that. I'm still proud to have done that. There was no reason to advise anyone to buy anything during this period, right? And so what was the point? Like the only thing that people should have been advising was shorts, and that's not what was happening at the time. And so I just wanted to clear all of that out. And but AR Collective like really kicked off and had like just a great team that built up, and so I hung out at AR Collective quite a bit, even learned a bit from those guys, and just really tried to improve myself during this era. And I made a call here in AR Collective, and I made a couple calls here in AR and Alpha, and then I said, get the F out of the market here. Get the F out of the market right here. Right? I made the bullish case and I made the bearish case, but I told everybody like get the F out of the market here and that this was your last resort, right? This 44 and this 46. And again, it just made a lot of sense. And then I didn't advise anybody to like take these type of trades. Like basically, this was another leg down, in my opinion, right? And we have no idea where this could have gone. But as we found support, as we started to have some type of like very clear pattern being put in, I did suggest that you know there was enough confluence to take at least one major trade and then perhaps a short. I didn't call the support the short, so I can't claim that. I'm not trying to claim anything false here, but I am saying that ever since this era, like my calls have been dead on. Okay, like the real calls, not the making the bullish case and the bearish case, right? Making cases is not the same thing as calls. These are my calls. Okay, that's a huge difference than just being open-minded to something, right? And validations and invalidations. Okay, and again, like I rarely give any calls. Like this is just 5, 6 calls, right? For months and months and months, right? It's like half a year, just basically 6 or 8 calls within half a year. Very, very rare because calls can screw people over, right? They can really screw people over. And the better thing is just to do the bullish case and bearish case, and then the validations and the invalidations. And that's what crypto normally should be. Crypto advice should normally be like that. It shouldn't be calls. It shouldn't be, you know, exactly as predicted, blah, blah, blah. Okay? Because that's a lot of the time that's just BS. Okay? You can't know 100% with precision. This is all probabilities. So you have to have two cases and validations and invalidations. But sometimes the evidence is just overwhelming. And so there are a few cases where you get, a strong indication that a call is possible. Even though there's multiple chances for that, there may be only one that really, really is crystal clear, like the perfect setup. And so there were a few of these, and I called them, and I didn't call anything beyond that. And then here, I started to increase activity because we are at super relative lows, and under macro analysis, I was able to see that now is the time to start shifting to a little bit more open-mindedness to accepting a little bit more risk into these plays as we find support similar to the support that we found up in this area. Whereas this was a no-go zone and this was a no-go zone. Okay. And I'm not trying to catch a falling knife either. Okay. I'm not a hero. Okay. I'm not being a trading hero or anything. I'm not trying to be a guru. I'm not trying to make fun of anybody for not catching the absolute bottom. People who try to capture absolute bottoms are more or less idiots. Okay. They will say the bottom was in at 33,000 and then they're going to be proved dead wrong, right? Because the market makes fools out of all of us if we just try to guess that stuff, try to catch falling knives, or if we try to buy into pumps thinking that it's going to go to 100K, right? If you buy into a pump thinking it's going to go to 100K, the market will make a fool out of you, right? Both directions. And so that's why I told you guys to take your profit right here, or at least that I was going to take my profit. Even though we had this pump, you want to sell when you're bullish. And look, we had a pullback. This would have been a good spot to buy back in. I didn't call that, so I'm not marking it out, right? I just called to take some profit here. I called to buy in here. I called to take some profit here. I called continuation and that I wasn't going to close the position. I wasn't going to short. I was just going to take profit because I didn't know if we were going to continue to bump or not. And then obviously this was a resistance zone that I already had called for during this trend in case we had pumped up there. That would have been the fourth take profit, 1, 2, 3, 4. And I had suggested to buy in around 18. Actually, the bottom of this one is like 18.5-ish. What was it? Yep. Uh, maybe 18.8, somewhere around there. We had made the higher low, and then we had confirmed it with basically a double bottom, something like that. Something like, just say 19,000. And then there we had a second chance over here around 19,500-ish, right? And so there was multiple points to take profits along this place, and there was bullishness building up on the charts. And then I came back in. I forget if it was here, but there was another chance to get back in on this. And I did suggest, okay, we have a little bit of a double bottom here. We have bullishness. The Stokes is crossing. You might as well get back in on this play. And then we took the play until 24,000, right? Uh, you know, took some profit before we met this resistance. But in case we broke through it, we continued to keep this 24K zone that we had from over here. And this 24K zone was defined by the measured move of this descending broadening wedge, and also just this zone right here, this kind of breaks down zone. And then on this pump, we took our profits, and like we could still be in this trade technically, but no one could have expected that it was going to just go vertical like that. But you could expect that this was going to be a pretty good trade, which again, if you go to the weekly, we had started to make support here, right? We were curving up nicely. And then we also had that kind of bullish crossing on the Stokes, on the RSI, and the MACD was looking really, really nice, right? Bullish crossing right here on its EMAs, if you use a double EMA on your MACD. And then if you went down to the 5-day, the 5-day just already had a confirmation of a bullish cross. And those usually end up to be okay, like at least for, at least for a week or so. And so it was a good bet. It was a good strategy to get in on here. And a lot of people are saying, like I'm seeing this on like different YouTubers who are super bullish and different gurus and all that stuff. Like nobody could have known. Nobody could have known. No, 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 no. You could know. You could know. Just do the TA and pay attention to the macro, right? And if the Fed said 75 basis points, boom. If the Fed said 100 basis points, then maybe flat or, back to the bottom of the range. But that's why you have stop losses. The rest of the TA said, get the heck in. Get in. Take a position. And why am I going over all of this stuff on a Trading Thursday? Because I think some of the newer traders need to like hear this, and also some of the older traders who maybe made excuses for missing these things, right? Or some of them who just got FOMO and maybe they started to buy in when we got this pump, even though we were headed towards resistance. There's a reason why I said, and again, you can go to the last episode, I said I'm going to take some profit right here. I said we should take profit at 21,900, and we should take profit right here. And this would just be the final zone to take profit, and then hopefully we get some type of pullback. We could continue to go or not, but you want to take your profit in the green, guys. You don't want to be chasing FOMO. You don't want to be FOMOing in, right? And buying in at the top of the market. You want to be taking your profit as we pump up. Otherwise, when are you going to take profit? When we fall down? That doesn't make sense. You buy when we fall when you fall down. And these moves of like 20% up and down, those are the moves you want to capture, right? You don't want to just be buying every little chop. You're going to drive yourselves crazy, guys. Do this bigger time frame trading, these swing trades, and really just enjoy your life, right? Don't just be obsessed with every little move in the chart. It's just going to drive you crazy. Let's see if we can apply some levels to our thinking, because we also need to understand, what's going on today. Obviously, we're bullish, right? We're super bullish. Daily RSI gonna continue to rise if we're above it. We're above it, right? 2-day Stokes continues to be turned up as long as we're above it. We're above it. All of these indications, 12-hour MACD, daily MACD, as long as we're above 22,500, we're going to be bullishly positioned. And our daily RSI doesn't break down until 22,500. So that's basically our, let's call it our support. Basically the line that we don't want to break down under, right? We don't want to break down under this area. Not really sure how I should color these things, to be honest. Just make it a nice blue, I guess. So we pretty much don't want to lose this area over here. And I'm just highlighting it for you so that you can kind of understand. You can see the prices over here. 22,500, 22,700. Just get a little concerned, right? Get a little concerned. And then where could be bouncy points? I was doing some analysis with my friend Yentli, and maybe 22,900 or 22,700. If we bounce off those levels, it'd be a pretty good place to bounce. And then, you probably want to have your stop losses underneath 22,500, right? Around there, depending on what you expect to get out of this. If we do have a major pullback, right? And then you can see if we break 20,000, we're going to lose all of our momentum. So 20,000 is basically the bottom line. But it wouldn't look good if we broke 22,500. Okay, guys, just keep that in mind. It wouldn't look good. Bullish above that. Let's go over to Ethereum. Ethereum, very similar setup, just a little bit more distended. I do have this kind of concept that we could get to the top of this range, maybe 2,000, 2,200, if we continue to push up. And that's just based upon some concept that we may be forming something that's kind of like a cup and handle here. And that could just push us up if the market chooses to just kind of follow that kind of thinking. But look how bullish we are. Like we're right at daily RSI continuation. We're well above this kind of bullish kind of control zone up down here, where you see everything just kind of moving together. And then we really lose our momentum under 1240. So we lose 1,240, like probably going to the bottom of the range or maybe much lower. But as long as we hold above this kind of 1600 zone, 1650 zone, then we're pretty bullish, right? You could consider to, on any pullback, to even buy back in on these areas, above that. But you probably don't want to be breaking down too far below, right? Like 1500. Probably don't want to be breaking down below there. Let's see what our daily EMAs look like on this. Just really bullish. But keep in mind that the 89 can be a pretty resistant area, so just watch out for potential smackdown here. This thing has just defied expectations. I mean, Ethereum has just had a narrative, right? Like the merge and all that stuff. Just ETH 2.0. Just lots of news lately, and just really driving this market up, giving confidence to other coins. Nothing bearish about this chart right now. Again, you could come down to like 1600 and you're perfectly fine, right? You could kind of wick down to 1450, but just you're gonna watch out in that zone that you don't start to squeeze to the downside. You definitely don't want to break 1350. Bitcoin, look at our expectation here. Man, I had redrawn this top line just because I didn't know if I didn't think that we could actually reach it, but we actually reached it. So we hit the top of that trend. And we're still following that teardrop. So if we do come back down to like 22,000, 22,500, we could potentially bounce up again. But if we start to break down, if we start to break this trend, just remember what's happened in the past. It's always been a pretty serious breakdown. Okay? Like these have been major breakdowns when these teardrops and wedges get broken. Now I showed you the standard TAs, now I'm showing you the weird stuff. This one doesn't count anymore because we've moved on from this one right here. That was just a risk but we never violated that line. So it worked out just amazingly well. And so now we got that pump, and then we're going to probably retest this teardrop, maybe retest this teardrop, and then if we continue to be bullish and we break out of the top, guys, that's just going to be it's going to be beautiful. Okay, maybe 26,000, maybe 28,000, maybe 33,000. Nobody knows. We don't know yet. We have to deal with that later. But if we break down, just be careful. Okay, I already gave you the levels. You can rewind this YouTube. The ETH CME chart, they never filled the gap. They never filled the lower gap. It suggests at some point they're going to come back to fill that lower gap. When is that going to be? I have no idea. I told you guys it could take months. Sometimes it takes months for charts to fill their CME gaps, but they usually come back to fill it. However, our play in general did work out. So we were suggesting pump up here, fill in this gap, retrace. I don't know why they didn't fill in this gap, but we bounced off of it and then come back to recheck. And this was going to be our resistance, right? Just like this was our support. And then we use the CME gap as actually extra support for some reason. We use this diagonal actually as well. And then we're just pumping back up to here. We have to see if we get rejected or whatnot. But I already gave you the levels for Ethereum using the 24/7 chart. That was the CME, the professional chart. Still looking pretty good, right? Okay, guys, gonna end it there. Obviously, there's like a million coins that we could talk about, but it's just too much going on. Lots of stuff popping off. Most of them have very similar setups to either Bitcoin or to Ethereum. And so just to watch what Bitcoin and Ethereum are doing while you're trading your specific coin, and of course you're probably going to see some good news from them, right? I mean, you're gonna see that they behave very similar to Bitcoin and Ethereum. So these principles apply, right? Just look to see if does it look more like Bitcoin or does it look more like Ethereum, and then you can kind of make a little bit of an analogy, right, with what I've said about those other ones, because Bitcoin and Ethereum are the leaders of the market. And look, guys, ADA's doing what we wanted it to. Look at this. It's starting to break out of that little area, right? It's made that bull flag. Look, guys, like we've been talking about ADA. It did this thing. It recovered. It reached this area of high resistance. It broke back to the triangle. It tried to break the resistance again. It came back to this kind of mid channel that's been making, and then it's trying again. And one of these days, guys, it's going to succeed. And so ADA is one of those lagging ones, which still hasn't popped off really. But, did we get a couple plays out of it? Yeah, guys, like we've been trading this one, and look, 16%. That's nothing to be ashamed of. 16% is a huge play, guys. Like if you're making 16% every day, like that's a great play, okay? And look, it came right down to my look at that, right down to the triangle, right? So this zone here, it's a zone. Oops. That zone made a lot of sense. Break down, break down, capture it, bullish, broke down, rejected, 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 break on top, rejected in this highly resistant zone up here, right? You can see the top of the candles, you can see the wicks, really struggling to get through this area, but look at this push. It's trying, it's going for it, guys. And so if the Bitcoin and Ethereum behave, maybe ADA is going to be able to do something soon. It's just one of those slower movers, that's all. And but that's good, because if you haven't gotten into the market, you probably want to go for something that hasn't popped off. You don't want to go for something that's already like exploded to heaven, because that thing's probably going to fall back down. You want to go for the ones that are a little bit lower, right? Even if it's slow, yeah, it may not pump. Who knows? But in the past, it has pumped. Okay. And if we go ahead and look at ADA here, look, just like Bitcoin, positive crossing, positive momentum, and then positive cross on the RSI on the weekly. And the 5-day looks good, nothing negative there, right? And so it's just battling this overhead resistance, got a lot of overhead resistance. And if the market stays bullish, this thing will try to figure out to do something. And that was a 16%. So think about the top of this range, right? Just the top of this range. It's another 23%. Like someday it's going to do it, right? I mean, unless we just get smacked down in this market by something unexpected, then maybe you have to, examine your supports down here and maybe short or whatnot. But also Kadena, right? Kadena doing very similar things. Look at this. How many times have we traded this range? And how many times has it paid off? Again, here's like another little zone, right? Like this is a zone. And what have we been doing every time? We've been buying in here. Every time we touch it, we've been buying in here. And what have we been doing? Every time we get to the top of this one, we've been selling. So what is this? 20%. Who's ashamed of 20%? That's excellent. It's excellent, right? Eventually it's going to break this overhead resistance, and eventually it's going to go, unless the market gets smacked down, in which case it's going to test the lows again. And if it gets smacked down even harder, maybe it could come down to like 80 cents. But guys, something's going to have to change in the market, because the market is turning bullish right now. So we're going to have to wait till tomorrow, until the next week, just to see the confirmation of bullishness. But guys, like, our setups are really great. Like, don't be ashamed of any of these trades that we've been taking. Like, these have been great trades. 20% is great. We got this move right here, right? That was almost 30%, 26%, right? Yeah, it came back down, of course. That's why we decided to take profit in this area. We mentioned that in advance. I mentioned that in advance. Take profit at the top of this range, and then do it. We did it like once, twice, a third time, right? You can see all these wicks. Like, we get to the mid channel and bounce up, fell all the way back down, right? Just wait till the top of the range. This has been a beautiful range that's been playing out. And then what else? Zill. Look at this. Look at this. I told you guys, Zill could break down to 37 cents. Where did it break down to? 36 cents. Okay. And then how much has it gone from there? 18%. Go look at the trading videos that I made. Zill, KDA, ADA. Like, every single play that we got was 20%. Okay. Yeah, I'm sorry, I didn't get like 100%. Oh, what do you guys, what do you want from me? I'm not a magician. But we got 18% trades. Brilliant, brilliant. And I even admitted I made a mistake up here, and I got out of the market at basically break even. And then I said, look, I'm going to wait until 37 cents. That's why I marked out this area. And look at this, 20%, right? Gains from that. Just being patient, right? Being patient. Let the market like do its thing. And then this bottom is rounding, and at some point it's going to pop off. Now, is it going to do this? Probably not, but it might do something interesting. Might do another 20%, might do 15%, might do 30%. Maybe it's not ready yet. Let's look at its EMAs. I mean, we basically caught the bottom, guys. Like that's brilliant. And unless the market turns down, very low risk area to buy. Yeah, this could take a little bit more time before it gets its squeeze. So just to be patient and have tight stop losses. And we're in profit right now. So this is really brilliant. It's really nice. It's really nice to see this. And again, like guys, if you're just panicking every couple moves, right, every 5%, you're just gonna freak yourself out. Like really think about the 20% moves, the 15% and 20% moves. Like that's what you really want in crypto. You don't want to be playing every 1%, 3%, 5% move unless you want to be super frazzled, right? Super frazzled in this market. Dollar continuing to come down. That's a good thing. USDT dominance coming down, entering my zone. Nice, very nice. Very nice. I like to see that. Excellent for trading. Please continue to fall. Volatility continuing to come down. Excellent. Approaching my levels here. Brilliant. I love this. I love this. We're having good trading conditions, guys. Okay. Yeah, this week was a little bit shaky because people were super nervous. That's understandable. But again, like apply common sense and you can take some trades. You can take some risk. Don't buy into pumps. Wait for a pullback. Don't just buy into pumps. Wait for some type of confirmation of some sort. Like have some principles, right? Like we bought here. We bought here and here. We didn't buy at the top of the chart. We bought at the bottom of the chart. Have some principles, guys. All right. All right, that was their alpha for the day. Stay safe and happy trading.